With Conquer Trading and Investing, and today we're going to be taking a look at market euphoria, what it potentially means. A lot of people very excited. You could even see it right now as altcoins are kicking off, and I see it around friends, and I see that people are getting really excited about their positions they're holding, and rightfully so, rightfully so. The question is it all about to come crashing down? That's what a lot of people are worried for. I saw like a very fun thing out there today, and it was like, I don't think it's true, that Grok was calling for like $400,000 Bitcoin by November of this year. And I was like, come on, there's like obviously one of two things. Obviously, either Grok just is 4 years cycled out, like obviously it's trained on past data, right? So it looks at data and talk about recency bias. Or they're about to pass the Bitcoin Act, which I don't really think that's in the cards right now either. But if it is, that's an adoption event that could really kick things off. Let's start this session off with that because it builds off of yesterday's session. We were talking about how Bitcoin and gold are being revalued in real time. Right now, Bitcoin is trading at $118,000. Looks pretty good to me. When I say it looks pretty good, I mean that we continue this sustainable channel. This is a very healthy trajectory that Bitcoin continues within. I like, and you remember that we did like, if you were to go ahead and you keep on one of these deviations, like here on the lower deviation, and as it is, it's just 60% year over year. Now the thing is like this: if you at the top of the 2017 bull market were to buy Bitcoin, you have to wait basically how many more years? It's not too long. 4 more years to get back to where you're in a good position. A lot of people think that obviously we're seeing diminishing returns. A lot of people think that we're going to be continuing to see significantly diminishing returns as we approach what they believe to be the window of the 4 year cycle closing in on us by the end of the year. Beyond January 2026, something's different, right? Something would be different, whereas Bitcoin has not peaked. If Bitcoin does peak, according to a lot of people's beliefs, at that point, what you're looking at is a lot more of the same, and that is really significant diminishing returns. However, that's not what happens as you move into the early majority of adoption. What you begin to see is a sustainable trajectory. Some call it a walk up. You could visualize it pretty good here. Maybe if I refresh the page, boom, 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 boom. And so it's a little funny because I obviously I normally go blank, right? And when I do, it's a new thing. So like I feel my cadence, my rhythm totally off. I'm like looking at myself, but I'm sure within a day or two I'll be really used to it. And this is a really good way to view hype phase action facing reality action, and then what happens as you hit ultimate market opportunity and the trajectory changes. That's what I perceive happening going forward outside of certain events. I mean, obviously, just go back a few years ago, no one expected that you would see China enter into this slow motion deflationary spiral. Actually, 3 years ago, Ray Dalio, 4 years ago, was telling everyone to buy China, buy China. But I mean, he missed it. Supposedly one of the greats. Not only did he missed it as bad as you could get. Right? Chinese tech sector absolutely obliterated. Their housing market obliterated. Now maybe he was just trying to get people to buy his bags. I don't really know. But either way, either it was that or it was just a really bad call. Why? Oh, risks to Bitcoin and where we are. And obviously, if the US were to run into some type of deflationary trouble, that would likely not be good for Bitcoin. Now, it is also dependent on the rate of adoption. And if we continue to see significant adoption continue, that's going to help continue to put a floor into Bitcoin. I want to start with this. Let's start with this. And this is building off of yesterday's session. In yesterday's session, we were talking about how gold and Bitcoin are being revalued in real time. And it's so well done by Jack here. And it really incorporates a lot of the ideas that I really wanted to express to you. So we're going to start off with this and get going.
We cannot have debt to GDP at 130%. That number's got to come down.
Right? How often have we been like U.S. Treasury Secretary Bessent? Like, listen, forget this whole Dodge thing. We can't do that. If we begin cutting spending, what's going to happen is the economy is going to implode. And we have a massive problem right now. These deficits are growing at an alarming rate. The only way that we perceive that we could get the debt to GDP down is going to be just to pour on gasoline and to have and spur massive growth. That's the plan. Like people say, do not fight the Fed, right? Do not fight the Fed. And under a monetary policy regime, do not fight the Fed. It's absolutely ridiculous. We're talking about the move now towards fiscal dominance. You're going to fight the government. Don't fight the government. It's going to add up really well.
It comes down by printing money, by debasing the dollar. You can debase the dollar against gold, against Bitcoin. I'm telling you, this is it. I'm telling you, I feel it in my bones. I really do. The president and his family just bought $2 billion worth of Bitcoin.
Right? I've been saying the same thing. The president is like the signals are as clear as can be. Whatever happened to Fort Knox and the audit of Fort Knox? We saw a lot of movement once Trump became president as far as a lot of that rehypothecated gold being called back home. And then like it's been radio silent since. Now, do you think at the most opportune time that Fort Knox is going to be back on the table? Or do you think that like the people running the show, and maybe it's true, maybe they're just really inept and maybe they assumed that the gold was there and then they learned that the gold wasn't. So they just kind of, radio silence. I don't think it's that. It could be. You never know. But and if the gold wasn't there, I think what they would do is they would call in some Hollywood producer and they would get like, they would figure out how to like fake the audit and they would do that, right? And I really believe that. So point being, if they want the gold to be there, it's going to be there.
Next, Trump opens U.S. retirement market to crypto investments. How do you debase the dollar and get reelected? Put Bitcoin and gold in everyone's retirement account and send that shit. And by sending that shit, I don't mean Bitcoin to $1 million. I mean the dollar to fucking zero.
I don't know about this part here, about the dollar going to zero or anything close to that. And then he gets very excited about the devaluation of the dollar and could be. I mean, obviously our expectations, and we're just following price action. We're following what we believe is occurring on a macro level. And we watch the breakdowns that continue. I mean, we were all over it on the breakdown over here. Had a nice ride down, and since we've really just been flip-flopping in this whole area. And the dollar, if you ask me, I mean, it's a pretty big move that has occurred. And we, again, here's our latest sell impulse, and we just stay on the right side, because usually after really big moves is what happens is markets consolidate. And that's what you're seeing ever since April. You're seeing for sure downward sloping trajectory, but a lot of repricing going just sideways over here, getting ready for the next big move. And if you had to ask me, I assume that move is going to be 12 months from now, dollar significantly lower. Is the dollar going to zero? That's hard to say. What type of dynamic does, because a large portion of Jack's case over here, and it's really important, is that could you stretch the line? Oh, Ace, you wanted to stretch this line yesterday. I'm going to go ahead and keep it up. And that, okay, Ace, now I totally see what you're talking about. And look at that. You have the wick down into it. And then since we've been riding it. So, and we've seen this happen a lot. Do you remember what happened on Bitcoin as we had the massive breakout of the bull market, the first confirmation, and then like this? We go ahead and draw these lines. And I love seeing our TA being expressed throughout the interweb. I absolutely love when I see not only our TA being expressed, but also our macro views. And I'm beginning to see it a lot and everywhere. Absolutely love it. I think that this is kind of what Ace has in mind over here. And he's seeing the breakout. You came in for a retest, and then you came in for a second retest. Haven't had the actual confirmation of a breakdown. And in this case, it just wound up holding. And then we were able to move out of it. And is something like that happening on the dollar, right? So I think that's pretty much what Ace is viewing on. What I'm trying to line up over here is, do we keep this outermost trend line, which Ace actually, and that little bit of a vantage point gives me like a little bit more confidence that we just want to keep it to see a little bit longer. And I'm also trying to figure out like what's happening here. Like when do we like are we seeing kind of like a new structure forming? When do we get the breakout to the upside? Do we get the breakout to the upside? I keep looking at Brent Johnson over at Santiago Capital, dollar milkshake theory, and wondering like what his views are. I remember going back not too long ago, and it was maybe a couple of months ago, and I was pointing out to Brent that what happened over here was the dollar had sold off massively, massively, and then you saw what was the dollar milkshake play out and that massive appreciation. Remember where I circled here? This is where we went from dollar bulls to dollar bears, right over here on that breakdown. And we held it all the way. First, it was, I forget his name, someone who was 2020, 2021, very present in the community. I forget it. Will was his name, actually. It's been a long time. So big shout out to Will. Big shout out to everyone that CTM has played some type of role in their life, hopefully changing lives. Big shout out, silent majority. And then it was over here on the first breakout that you have over. This was very difficult to manage. This was very difficult to manage because you had a breakout, right? The yellow line. And at this point in time, a lot of people were talking about an inverse head and shoulders. Again, I don't know if I see it or not. Is that the left shoulder? Is that the, I don't know whether or not, but here's a breakout and then it's failed breakout, right? And again, then that's when you have to watch out for liquidity grabs, because patterns that have a failed breakout, right? And it looks to me, I know that, I don't know why we got lucky. We were able to hold through this. I say we got lucky because sometimes if you know too much, it could work against you. And when you say know too much, I mean, in real time, if I'm doing this with you and I have a liquidity grab over here and then a breakdown over here, I'm sorry, I'm at this point in time in my life, I'm going very, very bearish on the dollar, right? And then obviously to take that further with you, you could see that, I mean, that's a clear breakdown. Let me just get precise, this is where the education happens in real time. That's a sell signal here. Coming off a liquidity grab on a failed breakout to the upside, that gets me very bearish. Now here's the thing. What we do look at would be two things. Number one, and I'm going to tell you the better. This is what we would like originally look for. Here you have a breakout, a close above the line back again. That's when you would obviously flip back bullish, right? You have breakout, retest, resumption up, or retest of the support over here. Now, the correct thing to do, don't forget this, because it doesn't matter that we're looking at the DXY back in 2021. No matter what time frame you're trading, it all is something that could translate into whatever you do. But when you have the breakout and then you get back into the pattern over here, you just went neutral. And this wasn't a breakdown. And then you could come in for, acceleration down, retest even, see if there's a resumption. But when you get back into the pattern, that's where you got to go neutral. And I'm trying to think of something recent. It's down over here. You ready? And here's a similar situation. This taught us an invaluable lesson that maintains till today. And you could see this, right? And what happened was major breakdown on the dollar. Everybody, dollar's going to zero. Jack Mahler, dollar's going to zero. Dollar go. Do you think the U.S. wants the dollar to go to zero? Do you think that the U.S. wants to lose their reserve currency status, or do you think that the U.S. is looking to devalue the dollar here, spur on growth, and at the same time shore up the treasury market through stablecoins? I mean, they call it the Genius Act, and not for nothing. It's kind of like when you think about what they're trying to architect, it is genius. Now, a lot of people have concerns about things like CBDCs and stable coins. I'm not so sure. I was the person who said early on with all of you that, like, listen, they're going to engineer a crisis, and the reason they're going to engineer the crisis is to go ahead and they're going to dump stable coins on us. I read the 2018 IMF white paper on stablecoins and CBDCs. Sorry, not on stablecoins, on CBDCs, and I know what they're trying to do, but it's deviated massively from what they were originally trying to do. And why they may be trying to do that right now in Europe, I keep seeing that hag Christine Lagarde going on making her rounds, and she's talking about, like, you can't spend over $1,000 anymore. You can't do it. We won't allow it. Like, you have no more free. Like, they're trying to. But I believe in the people of Europe, and I believe it's going to actually end up okay. They're going to go ahead and they're going to be able to figure out a way, and slowly, country by country, they're going to take back their continent. I know it's going to happen. Either way, we're over here. Nice. Nice that you noticed. I love it. I wanted to remind anyone, like, on YouTube, you have like the gear at the bottom. And what you could do is you could go ahead and you could switch that. Sometimes they put it on auto and it's showing you at 70/20. Maybe that works out well for you. Maybe you could raise it up. You could go ahead and do it. So we had a breakdown over here on the dollar, and it was a bad breakdown. And then you see that we came in for the retest and then it failed. Now, I didn't go ahead and get neutral over here. I didn't. What I did was I waited for the breakout over here, and that is where I got bullish on the dollar. I'm sorry about that. I don't even know if that's correct. It is correct. We were way bullish on the dollar throughout all of there, and then we had the breakdown, and then this one we didn't take. This was at the beginning of January 2024. We talked about how the dollar was breaking out over here, and how yields were breaking down over here. But I thought price was going to kind of meander sideways, and we said we're going to follow the technicals as far as just from a learning perspective, but it's not a trade. And the dollar wound up actually definitely appreciating pretty far on that move. So that was a move that was missed. We got this one here on the breakout over here, and then we were able to get the breakdown and then stood aside. Point being about all of this is you have a pattern breakdown. First of all, that could cause the liquidity grab and go the other way. But if you fail on the retest, that's the earliest opportunity here to get neutral. That's something that you have to look out for. All right. Dun, dun, dun. Enhancing the bit rate. We could probably do that live. But yes, I'll take a look at that afterwards also and see how far we could push that for sure. I wonder if we could do it live. I'm not really sure if we could do it live or not. So being that we're live, I'll just let it go, and I'm going to try to set a reminder here. I'll favorite that. I'll come back to it, take a look at it, and we'll see what we could do. Did you notice here that we're seeing inflation expectations as per true inflation kicking back up again, which is kind of interesting. And again, we have that cautious outlook about what's going to happen. Is Powell actually right? Did I see that the Japanese prime minister said he's not signing any type of trade deal, that he's not committing to any type of agreement? I think I saw that. I'm not. Again, I'm kind of unsure, but I think that's what I saw. That's weird if that's the case, because the president said that there was a trade deal. Interesting. Listen, I think Powell, lots of wins, lots of losses. When he's saying that, listen, I think that he would be smarter to understand that long-term tariffs are actually not inflationary. Actually, they're putting a tax out there, whether or not it's on the suppliers, whether or not it's on the producers, or whether or not it's on the consumer. And it could have that one-off price appreciation, but likely we see deflationary forces take hold after that. But he gets to make the case if all of a sudden in the readings ahead we begin to see, as we move out into August and September, unless we continue to see further kicking the can down the road and further taco. But you know what? I think that number one, okay, I want to see two. And I believe that it's possible that we begin to see a little month over month upticks on the CPI, and that ultimately wound up getting faded. I was looking at oil this morning, and I'm noticing, well, we had that major, first of all, black diamond, CTM all day long. Again, I love seeing our TA being utilized everywhere because it's a new generation of TA. It's a type of TA that was never used before. Then you had the confirmation of the conservative breakout and a sharp acceleration. And then all of a sudden, the tensions in the Middle East subsided massively, and you saw a major breakdown. Is it true that Iranians just went ahead and confirmed that all of their enrichment sites were completely destroyed? I think that's I mean I saw lots of um like reports that like the whole mission was a foobar and like and I think the US intel from the very beginning was like, no, we took it out, we destroyed it. I think there's confirmation. The only reason I bring it up is because you want to know who has a history of actually being right and who's lying. It's very important. So then we had the retest over here, similar to the US dollar, the retest of the breakout, and then ultimately a sell impulse failing, a sell impulse kicking off, I should say, a little bit downward, I don't want to say acceleration, but downward follow through. And true enough, like this could come all the way back into the support again, that broken support. And the oil would have to fail here for really a retest of the lows. It could hold over here. Right now, though, so it's kind of neutral-ish, right? We had what was early entry, confirmation, and then breakdown, sell impulse in the line, but the structure has the potential here to continue to hold. When do you regain this upward position? When does this sell impulse get faded? For right now, and it's too soon to know. So right now we're just going to go ahead and we're going to put a little bit of a marker, and it's just like that. And if we get above that at that point in time, then this sell impulse gets flip-flop back to the buy impulse. And right now, as I look at this gauge, I say to myself, well, there's a good chance that inflation over into August is just going to be level. It's not going to be a surprise one way or the other, just level. Look at the story, what's going on the 10-year, and we saw what was the sell impulse triggered into the buy impulse, which just came in for a retest. That continues to maintain. Most of all, in my read on yields is they just continue the massive coil. And I'm not seeing right now anything that should suggest that we should be getting ready for a resolution of that. Let's keep going over here. Actually, let's get into, what should we go into over here? Do we start off with, the theme of today's session? There's a lot of euphoria going on right now in the markets. You could see that expressed obviously through things like altcoins. We had the major flag breakout taking altcoins back towards their all-time high into that area of supply. We want to see ultimately a breakout and then a massive run, right? After that big consolidation, boom, boom, ah, boom, ah. Are we seeing, what's going to be the catalyst to take this further? Or is this ultimately get faded? And right now we're looking at a couple of different things. The bold yellow line is where this breakout ultimately is invalidated. This was early warning signs, very aggressive. And so far looks like a decent place to have taken some off. You saw fast like acceleration on the follow through to the downside and coming in for a retest right now. You can see breakdown retest. So are we, are we going to see further breakdown, or is this going to be faded? Are we in a strong market? Obviously, I'm giving it room. If you look at our altcoin positioning, it's pretty interesting. So let me come down and we'll start off with Solana, and we have that retest into the line that we gave and said a breakdown of that line. That's an underbelly, the first warning of a breakdown. And you can see that's still holding. You could see it also the same. The line we gave on Cardano has been tested, continues to hold. So could you say that this structure that we're seeing is still pretty healthy? I mean, we're on the verge. You get a close below here, and I think that we're going to see a bigger correction. And I think that is going to, whatever's happening on our charts on Solana and Cardano is going to be happening over here on Total 3. I do believe that. Ethereum looks pretty strong. That looks like a bull flag that it's trying to come out of. So we would like to see Ethereum here hit a new yearly high. Like that would show that there is absolute substance to this move over here. Nevertheless, our Ethereum here continues to be building into position. 43, almost 43% in unrealized gains. Cardano here holding 16% in unrealized gains, and Solana 10% in unrealized gains. Let's check in on the dashboard, and we're seeing right now, right, that 42% on Ethereum. We're seeing that 10% on Solana. Bitcoin bull runs 19% suggests that the move. So you know what? We say things like, if you had a simple strategy. There's nothing simple about our strategies. They are, I mean, these things are battle tested, forward tested. These things have been crafted in the fire. When we went private in 2022, we spent the time after that. I mean, we would put in 90-minute to 3-hour sessions daily, dense work, and then we talk about the hive mind collaboration. So it wasn't just me. It wasn't just me and it was me and God knows how many people putting in 40, 80 hours a week into and build it. I mean, look, AI is great. It's a great tool. I think machine learning is a great tool. We've utilized it in what we've done to certain aspects through our modeling. And there's nothing though like collective collaboration and humans. Man, beautiful stuff. Equities over here. So we saw Tesla stopped out of its trade. Tesla taking a full stop loss over here and putting in a 3.62% loss, coming off of Elon and Tesla's earnings, and Elon saying, listen, it's going to be a little rough ahead for quarters, more than one. And one of two things: either Elon is actually setting expectations that could be beat, which could be, or he's actually preparing people here for a little bit. And that's great, honestly. I believe in Tesla long term. I truly do. And I think that this could wind up being a really strong long-term buying opportunity. So if we see further pressure, I look at that as a really good thing. I'm curious. I just want to take a look with you all because I am curious. I want to jump over here and take a look at what this means for Tesla. If we move over to our structure, and granted, this is not Tesla's structure. This is Bitcoin structure. But look at this test over here. And then that resistance then becomes support. Over here, you have this resistance becoming support. And then over here, this area. I mean, it's close. I'm not sure if it's exact. Bitcoin, I spent a lot of detail trying to get that really, really, really exact. I'm not sure that we're there on Tesla, but I think it gives. If you had to ask me, Jordan, what's your price projection for Tesla into 2030? Well, I would say to you that, like, outside of this breaking down, right? And if that broke down, I would say that that's a problem. And likely, if that were to break down, that means to me sideways consolidation, which means to me further drawdown in time and duration of the magnitude. But outside that happening, I would say this is the lower band. Oh, this is the lower area. Tesla spends very few times in that area. The last time it did was during the 2022 bear market. And then we had over here in April of 2024. And, I feel like this upper line is pretty much the lower band. And that's the one that I would say there's a good chance coming into 230 that Tesla has a CAGR of about 20%. And there's a good chance that what you're seeing into 2030 is somewhere around $500 a share. I would say that's a very comfortable estimate. Then I would also tell you that actually Tesla spends about 50% of its time in this band over here. And if I just show you what that band looks like into the end of in 2030, I would say that, $800 a share, that's like there's about a 50% probability that's where we're going to be. There's about a much lower, I would say a 10% probability we're down over here. There's a 50% probability we're around $800 a share, 7 to 900, whatever you want to call it. And then there's also a very small possibility that we would be towards the top tier, whatever you want to call it, 10%. And then, of course, there's also the chance that you break down. And if you break down, you would have to say something is wrong. So anytime you get the opportunity to buy Tesla down towards this band over the next 5 years, I think that's a great opportunity. I think that's a great way to look at, wait, is this from a risk to reward stance a good place to be dollar cost averaging into Tesla, taking a position? Or you could say that when you're towards the top area over here, this is probably not a good place to be leaning into Tesla. And it could be a long time before we're trading back above that. That's how I look at it. And then again, you could look at it through the lens of CTM. And you can say, well, that's cool, George. The way that I look at it is, Tesla has that 20% growth year over year. Let's go where the bear market started in 2022. The bear market was in 2022. That's where we looked at Tesla trading that lower band. And I would say, okay, yeah, that's significantly better than a 20% CAGR. I'm all about it. That looks like, the way that I want to go about looking at. Nevertheless, I think it's good to have expectations about where you expect, like, are we undervalued or overvalued? Is something wrong? And then you take CTM systematic approach. And obviously, since 2022, since the bear, you're tremendously outperforming a 20% CAGR. So here it is in 2022. So I would say from 2022 that we just looked at, Tesla's break even. It's off a little bit, maybe a couple percent, few percent, but it's break even. Think about it. Think about it. Very important how you look to approach the markets. Right now, markets are, and a lot of people are viewing them as quite euphoric. A lot of people say, yeah, markets are euphoric right now. And then we take a look and we say, well, yeah, we're definitely towards, looking at just past 20% drawdowns, where we're towards the top deviation. Not only that, we're coming off of 2 years in a row of 20% plus gains on the S&P 500. Are we overdone here? Are we about to hit a wall? And then I look at things like this. And I'm like, whoa. So you see that the Nasdaq number of consecutive days above 20-day moving average, and we just hit the 63rd consecutive day above its 20-day moving average, which is the longest streak since the dot-com bubble. Euphoria, are we about to hit a wall? Are the markets about to crash? And then I say to you, when was the last time that we were this oversold? You said the dot-com bubble. What's the thing about bubbles? Bubbles really go. They really move. When you're in the sweet spot of the bubble, you don't want to be looking for it to pop. You want to be riding that thing. You know, case in point, let's go to Bitcoin 2017. It's a good area to look at. And 2017, and look, as we came from, you know, $850 on Bitcoin was a big number. Why do I say that? Well, we just spent what felt like an eternity down in around 250. And then all of a sudden, in like boom, Bitcoin trading at 850. Ooh, that's a big level. If that breaks out, it's gonna go. And then it does go. And it goes over 1,000. Over 1,000, and then it goes to 3,000. And do you know how many people? I know people. Do you know how many people took profits at 3,000 and they were like, yo, I just made bank. Yeah, I just made bang quick, and then Bitcoin is at what? 5,000? Raul selling. Raul's I come from TradeFi. That type of gains don't happen. I'm out. Bitcoin, the bubble was just getting going. And you saw it go all the way towards $19,000. Similar situation when we called the breakout here on CTM of the following bull market. And again, one of the things about that was in July of 2020, we called the bull market breakout. And then, man, nothing easy about it. Price comes in for the retest. You don't know if it's going to fail or not. It wound up being able to resume out of it. And when it did resume out of it, and you saw Bitcoin go from $10,000 to $40,000, I was like, listen, I know that's a big gain very quickly. Do not sell. This thing is just getting started. Price moves towards $19,000. I said, okay, we can have a pullback. Let's look if we have a 30% pullback. Price pulls back 15%, and then all of a sudden fades it. And I'm like, whoa, risk is to the upside. And then you saw Bitcoin 40K, Bitcoin 59K. It moves quick in a bubble. Are we in a bubble right now? No, this is a sustainable channel. We're not even close to walking towards what would be considered an elevated area on Bitcoin. Well, thank goodness that we have an opportunity, a way to go ahead and engage that. Now, I was talking about bubbles, and I was talking about 2019 and 18. And the last time that we saw during the dot-com bubble, right, was the last time we saw the amount of consecutive days Nasdaq was above its 20-day moving average. But if you look, it's not the dot-com bubble. It's right over here in early 1998. 1998. Why does Jordan keep pointing out 1998 to me? Look over here. You can see this is exactly where we are in 1998. You're telling me the last time that the Nasdaq had 63 consecutive days above its 20-day moving average was back in 1998, this deviation right here? And I'm like, yep, right over here. So you're saying that the last time that the Nasdaq had 20%, I mean, S&P 500, Nasdaq had even more, 20% back-to-back gains was in 1998? Yep. What happened over the next 2 years? Well, yeah, it was just getting started. It was literally just getting started, and the majority of the gains came at the end of the bubble, which always happens. And what are you talking about the end of the bubble? Well, look over here at the end of the bubble. Look over here at the end of what was the bubble. I had no idea in real time. I thought we were going higher. I thought we were going back towards minimum 180,000. Thank God for TA. De-risk down 53,140. Second de-risk 35,000. Third de-risk 27,000. Bull market breakout 17,250. You live and you learn. You try to get better each and every day. That's what we're here for, to work together, to learn, to conquer the markets. Jumping back, looking over, and talking about bubbles, and we're talking about euphoria. And I'm saying to you, are the markets euphoric right now? Last time we were in a similar situation was 1998. We continued here. The highest deviation we have over here, 1999. Obviously, the party was on, ending in March of 2020. Is the market euphoric right now? Barclays saying it is. Barclay has its euphoric meter at the highest point of this year. Market's at all-time high right now. Okay, good time that people might be a little. But what is this chart's only going back 10 years, which is okay. But I would like to see this chart go back significantly further. By the way, we were very euphoric in January 2021, but the markets didn't peak for 11 months later. 11 months later. And I would be interested to see what this looked like in 1998. Do you think in 1998, as you were looking at the markets recovering off a 20% drawdown and trading at the high, all-time high, that people were euphoric? I imagine so. I believe so, and I believe it's a similar situation, and more so, I believe, and I could highlight it over here because Lynn does a good job articulating, and Lynn is very early on this as well, and she's talking about, right now, is this time different? Well, it depends how you look at it. If you're looking at it in the lens of what's happened over the last 60 years, I said 60. I'm trying to go do math. Maybe, sorry, I should have said 45 years. If you're looking at the lens of what happened in the last 45 years, likely it's different. We're now entering a period of fiscal dominance. If you're looking at it in the lens of what's happened in the past, no, it's probably a lot more of the same of what occurred in this area over here. The last time that we looked at what, and we talk about, the debt to GDP. And then you see over here, Mahler is like, listen, they're going to go ahead and they're going to do their best to grow their way out of it. They're being very clear about that. And what you're going to see is Bitcoin and gold, they're going to be the beneficiaries out of this. And you're going to see, are we coming to an end? 4-year cycle, that states that we're coming to the end by the end of the year. Wait, is that recency bias? Or are you taking into account the full picture here? The macro, Bitcoin, are you looking at adoption? Are you looking at what we are, where we've come from? Let's go ahead and play a little head snack here, and then we'll go further.
Analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing. The prices might be slashing just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room. Grab the bull by the horns and to the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day.
Cabby, there are lots of thoughts about potentially what's happening over here. Let's take a brief look at MicroStrategy and then continue on. So while we're looking at MicroStrategy, might as well look at our current open equity positions. MicroStrategy is holding an open long here, 3% into profit. IBIT holding an 8.7%. Their entries were on the same day, or right around the same day. TQQQ continues to hold 33% into unreal. This is traded off the daily time frame. It makes things super easy. We also have the 1 hour on stocks as well. You can see that right now, NVIDIA is in an open long on the 1 hour, but on the daily holding a position here, 21% into profit. And then FANG is back into profit coming off of yesterday's earnings. And Google, right? So Cabby, sorry, not Cabby, Michael, Google had it had good earnings. It showed increased search revenue, increased YouTube revenue, and a lot of the concerns from its previous earnings were kind of alleviated. Now, and there's a lot of people who are really, really bullish on Google long term and believe that not only do they have that dominance on search, that through Gemini, they're going to be able to actually continue to capture a large portion of their. I don't know. Obviously, there's competition out there now, and let's see what Meta could do. Let's see what Meta does now that they're poaching all of this talent, right? Hey, here's 100 million for you. Here's 100 million for you. And we're taking the best talent that we could buy. And Mark believes that he needs to push really strong in this area. Michelle, thanks for confirming that there was a trade deal and that some of the details were, he just talked about some of the details. Again, I don't have that type of clarity. And then we're talking about MicroStrategy, Cabby, and what's going on with MicroStrategy, and jumping over, and we can see that, right? We had this last entry, so I'm going to draw some TAA over here, and sure enough, we have that breakout. That breakout is still well intact. All that's happened since that breakout is you can see this bit of resistance that I'm highlighting over here. We've just come in and I guess it's even better where not the wick where we come in low. We're just retesting it. And that resistance actually was formed over here as well. And then coming back into here in this area. So if MicroStrategy is able to resume out of here, it's looking super and it's looking very healthy. Now, you might say, why is Bitcoin here outperforming MicroStrategy, right? Is that what we're looking at? And look, I think that I'm going to go with it's very complicated in so much as that what it seems that Saylor is looking to do here is, you know what, every time that price goes up, he's, ATM, it's kind of the shareholders take a little bit of hit here. I think where they feel good about it is that they're accumulating more Bitcoin and they feel that, right now it's very early in the game. Bitcoin is at $120,000, and that the more Bitcoin that's accumulated down over here, in the future, it's going to pay dividends and be well worth it. But in the near term, it is putting pressure out on MicroStrategy share price. And then you also have to factor in, like, you do have other competition out there. There's for sure other competition, whether or not it's like Metaplanet. And what do you mean that's, well, a year ago, if, someone was looking to speculate into a Bitcoin treasury company, it would be MicroStrategy. And today it might be Metaplanet, right? And you could see that Metaplanet has, I believe, I haven't looked at it in a long time. I think it's taken a hit, right? Let's see what we're talking about, and let me just pull up some Metaplanet goodness over here, and I imagine it's taken a hit from where its recent highs, and it has. And you can say, well, what's going on? Bitcoin is higher. Why is Metaplanet? Well, the NAV had got so far extended on all the hoopla, and now you're seeing what is a healthy correction. There's nothing wrong with it. It actually, if you're interested, it's off now 45% and becoming a lot more attractive than it was when it was very exciting. And we got a conservative entry over here. I think it's a good time to be looking into when would be the next. Well, I'm going to leave it there. I don't. For the aggressive, let's come down to a smaller time frame. For the aggressive, you have this bit of resistance. I'm going to extend that down. You're triggering right now. Is that a good entry? Why is it aggressive? Well, the odds of it being a successful trade are a lot lower. I'm going to go ahead and go further. I would normally do something like this. And if price trades below that, this is downtrend. This is bearish continuation. And that's likely going to make a leg down. That's a good entry. This is a downtrend over the last month. I'm on a 2-hour time frame. It's a short time frame. Currently, if I zoom out a little bit, we're in an uptrend. So that's why you could be taking a black diamond, a black diamond. So there's the entry. Should you, if you were very would that be a place that you say, I'm just connecting these two over here. If I'm a short time trader, is that the place to manage risk around? I think so. I really genuinely do. And the reason for that is that if on this breakout, you want to see extension up. If there's been a lot of volatility, and if that volatility is going to snap, you want to see it snap pretty quickly. So in this particular situation, I would really go with the tight stop. You stopped out, no big deal. Watch for the short to trigger. I wouldn't go short here. I would exit along here. I would be shorting down below. And then if you're stopped out on the long, you could, look for an opportunity to re-engage. That's how I would approach it. But the point was, what are you looking at with Metaplanet? And if Bitcoin is trading higher than it was in on June 17th, and I'm just making the assumption because I have to check. June 17th, and Bitcoin's broke out since then. So why is Metaplanet trading lower by 45% as Bitcoin is trading up 20% or 18%? And well, the NAV had got so far extended on Metaplanet that it makes a lot of sense. So that's what's happening with MicroStrategy as well, right? And again, when I say it's complicated, MicroStrategy just launched another product here, and look, I think that if I was an investor in it's very complicated. I'm going to leave it at that. There's a lot of products, and those products, they work together. And I believe in MicroStrategy, or when I say I believe in MicroStrategy, I I mean, look, I think it's going significantly higher, and I think that what Saylor's doing here, yeah, I think it's good. So that's what's happening though. If people ask and then Cabby, you know what? You have access to being able to navigate this the best, and that's through MicroStrategy systematic, and we're long, and like you don't know what's going to happen, but we're going to follow momentum, and it's going to put us in the market at the right time for MicroStrategy, and it's going to take us out when momentum wanes. And if Bitcoin makes the leg up, if Bitcoin's trading, we only have 37 likes today. It's a phenomenal session. Go ahead, if you're here, throw the love, throw up the support. Go ahead and hit the like button, and for sure. Are we seeing elevated selling on MicroStrategy? I'm not sure. On Metaplanet, I hope that those that have been the architects in, I don't know. I think most people involved in Metaplanet are probably have long term plans. Dun, 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 boom. Ah, where's the dolly? How do we throw it up over here? So I go. Is that first of all, confirm that this is the chart we're looking at, and then I'm going to say, is there any difference between? Please confirm. And then when I look at this, and my eyes are going. Interesting spike above, right? Big fake out over there. Um, and then I'm gonna just do what we did on Solana. On Solana, we have the underbelly coming off of here, right? And I like the underbelly coming off the top, in so much as that we retested it, and then that gives us a very clear look about when potentially that's a great place managing this from a zoomed out discretionary point of view about where we would be looking for this breakout now. Like we have the yellow stop loss. This is the place. This is as precise as I could get here about when you would be looking to say, all right, that alt move is coming to an end, and actually this was going to be and will be that burst that Jordan was looking for, and it's actually going to be faded, which I don't know yet, right? I think that we could easily head into some type of bearish consolidation here and make a leg down, and you might see that express through total 3 here, and you will see that this is nothing more than nothing more than a bit of a retest, and we go higher. Appreciate that, Chio, very, very, very much. What else are we looking at? I think we nailed it. We're all over it. That I guess the major caution that I'm blowing up today, and we continue to watch two things that are very important from a macro standpoint over here. You saw that manufacturing PMI in the U.S. came in, into contradiction over here below 50. Is that it was below expectation? Is that something to worry about? And then you also saw that services came in better than expected and are expanding upwards. And the U.S. is a service economy. So my read on that is that's pretty good, but it's hard data. We have to continue to monitor the hard data. And at any point in time, we were to see a deterioration in the hard data, that is something that we would get concerned about, because as the Fed begins looking to cut, right now the Fed is pricing in by the end of the year, or should I say the markets are pricing in by the end of the year, at least one cut, maybe two cuts by the end of the year. And Powell said if it weren't for the uncertainty, he would already be cutting, right? So he's got a lot of pressure on him, and that pressure might cause him to double down and say, you know what, then I'm just standing pat. If someone pushed me, I would probably be like, all right, well then, even though I want to cut, now I'm not cutting. And that might be what Powell does into the end of the year. Markets are not expecting that. Markets are expecting right now, this is all variable, 1 to 2 cuts into the end of the year. And as the Fed begins cutting, we have to watch out for, are they cutting into normalization? By the way, big shout out to everyone taking CTM, macro, TA, and expressing it. Lots of love. Always give a shout out though, right? It's the way to do it. And whether or not they're cutting into normalization or they're cutting into a recession has massive consequences as far as equities go and our perception of what we're looking at. Again, I believe that things are they euphoric, or does, as someone said earlier in the comments, does euphoria beget euphoria? And are we just getting warmed up? And notice as you continued out over here, like this was like the ignition. But as you come, this is a 5-year period. So this is like a 2-year period. So this is like a 2-year period into the .com bubble top over here. I don't know. I could say the only other time that in the last 25 years, 27 years, that the markets were trading, past 60 days above their 20-day moving average was back when they had done a similar situation. And this is the 1998 cycle right over here, where both previous 2 years were coming out of a big bull market, 20% plus gains back to back, and then both coming out of a 20% drawdown, and both extending towards the top of the deviation the same amount of days afterwards. I'd say there's a lot of similarities here. And then I take a look at the macro and I say, well, we're watching. If we see a breakdown in the hard data, we're watching for it, but we're not seeing that right now. And we are seeing a lot of the government policy is looking to really turn it up and turn on that gas and really get this thing going. That's likely the direction that it's going. Again, it's all variable. It's why we show up every day and we put the chart in. FOMC expectations. I mean, Powell specifically has not commented on how many cuts he expects into the end of the year. He's only said that if it weren't for the uncertainty of the tariffs, he would already be cutting. But FOMC projections, which were just released last month, they suggest that, the market is pricing this in for a good reason. This is right now the highest probability of what's going to happen. And again, I guess the next major point that we had is the end of August when we get the Jackson Hole Symposium. Maybe we're given a crumb at that point in time, but it doesn't look like to me that we're seeing any type of resolution by August 1st. I think there's going to be a lot more uncertainty. Market right now is climbing that wall of uncertainty. Everyone, circle short. Let's take a look at it. Let's make sure we get into it. Let me come over here. Since Dog Nation, you were early on circle. Let me start over. So this is the easy. We'll start with the easy first. What's easy? And that looks like massive sign of a continuation up. And could you be looking at rightfully so? I mean, this is hard, right? This is where you draw the line. You had the breakdown over here. That breakdown was then faded. Do you move the line like this? And are you looking at that current? That's what you're looking at, that current breakdown. Or should it be like this, which it should be? You see the difference of what I just did here? Like this is the trend line in place. You can see the touch here. You broke down. A lot of people then go like this, which I mean, it's good. It's okay. But this is actually what's happening. Like just the one touch over here, and you can see the 3 touches into it. Breakdown, retest, resuming down. Like, yes, you should be short here. And then where does this get faded? Where is the place where you got to be looking for an uptrend to resume? And so again, a lot of people would do this initially. And then my eyes then went like this. I don't think that's bad either. But the correct thing to do, I believe, is this. Now I lost it. And then let me confirm that and see. And I can't do that. But I'm going with my instinct. That's my instinct. And that's when I would look for, right now, rightfully so, short. And this is where you're managing risk around. That's your stop. Boom, boom. That's a hard question. So one thing that there's a difference, right, between Circle and Tether, and maybe the reason that Circle's under immediate pressure is, first of all, IPO shot the moon. Was there further profit taking? I mean, the IPO itself was a liquidity event, and then a lot of I'm sure but Tether is now looking to go, from what I saw from afar this week. Tether's looking to go domestic into the U.S. And if it does that, like, it becomes the dominant stablecoin, right? It already is. Circle has massive market share as well. And if Tether's kind of pushed out, then that bodes well for Circle. But Tether looks like it's trying to, and again, who's it partner with? Well, we looked at Jack, 21 Tether, but more importantly, Cantor Fitzgerald. Cantor Fitzgerald, the company of the Commerce Secretary. So there's a lot of inside buddy going on over there. And if Tether gets into the U.S. market, Tether is going to maintain its dominance and be entrenched, and then there you go. And Tether's business model is a lot different than Circle's, right? They're both so it's hard. I can't value it. I'm not going to value. I could follow the TA and know when to be on the right side. And look at, a couple of things. You could have the down over here. Is that more fairly valued? Or I'm just reminded of what happened on Coin. So I remember everyone was extremely bullish on Coin's IPO, and that's a very different looking chart. So Circle on its IPO extending outwards, Tether fading down badly. So Coin, and it's just recovering now today, right? Just recovered to its pre-IPO valuation. And then I don't think this is right. I think this is late, but look at that ace. breakout, retest of the structure. It's all on tact. When I say that's late is, I mean, this is aggressive. You're stopped out here. You take this trade, you're stopped out. It's why I draw my angle like that. Look at that. Beautiful. Stopped out here. You could one of two things. Do you do this? I guess this is the outermost one stopped out. That looks good and clean to me. And then that's obviously the earliest opportunity. It's low, it's high risk. But look at that, the greatest potential. And then this is what I would do though. I would be from this point to that point, and it's a little later of an entry, but I think it's the correct one. All right, everyone. God bless you. Have a beautiful day, everyone. God bless you, and I'll see you all back on the inside. I hope you like the new face, you know? Have a beautiful day, everyone. God bless you.